Welcome to TheoTRADE. This is Don Kaufman. October 4th, 2024. It's a Friday afternoon. There's about 30 minutes to go to the cash close. The markets, well, ending in one of the most unlikely areas. For the most part, this marketplace looks and appears to be massively unchanged on the week. But look, what you got to focus on, risk just continues to build with markets just trapped in this range. It's kind of what I call stuck in the middle with you. Let me show you what I see inside of some of the equity markets. Then we're actually going to look at everything from what? Bonds, dollar to yen to gold. We're going to talk a little bit about the amount of gamma risk. I'm not going to completely geek out on you, but you got to understand. Holy crap, is there a lot of risk rolling forward in this marketplace? And I promise I'm not going to be talking about negative and positive gamma. I'm just going to show you what is an absolutely tremendous, I mean, we're talking billions and billions rolling forward of risk into next week and how wild that outcome is going to be. So let's get started here, of course, on this Friday afternoon and the weekend update here at TheoTRADE. So the S&Ps at this moment here, up about 40 handles, which is a little bit shy of what they were expecting them to move today. And after the jobs number came out, and the jobs number, it didn't disappoint. The jobs number was smoking hot. The markets exploded higher, sold off huge. We've laughed, we've cried. We've actually retrenched a little higher. But right now, I mean, look, right now, the market is floating more than it is trading. And I say that just in respect to the fact that there's just like no volume inside of the S&P futures right now. But in a moment here, I'm going to show you where all the volume happens to be. So the S&P 500, I'm going to cruise over to the SPX. I often term this the mother of all products. If you're looking at the line on your screen right now, that, people, is exactly where the week started. Just take a look. And I say this is the most unlikely of areas. Yeah, I have no problem in actually saying, as a trader, okay, I've been doing this a long time. I'm actually kind of dumbfounded that we're massively unchanged in the week in the S&Ps. And today's rally, and by the way, with some time left here on the clock, 30 minutes, we can get up there, we could rally a little bit more. Let's get crazy, right? But for the most part, the week is just inside the exact same range that we've been stuck in for, well, the previous kind of 2.5 weeks here. In fact, I'm going to cruise back now to the S&P futures, and I'm going to pull you into a 30-day 1 hour. And I'm just going to zoom in for a moment to discuss what I term stuck in the middle with you, because the range right now, well, again, fairly wild. And we're going to look at this in another kind of instance and kind of display, if you will, what I believe the outcome to be of this. But that is presently the range that kind of defines us all. And the bottom of this range is somewhere, well, first of all, we were there basically yesterday. It was about 57.40. The upper edge of this range is somewhere right around this 58.20. Okay, with a little peak over here at 58.30, but that is the range now that has defined us. And you can take a quick glance over here. This is a Thursday. There's another Thursday. So you're, a couple of weeks into, again, an incredibly, incredibly tight range. So just stop right there for a second. We'll come back to the S&Ps and why I am elaborating and will elaborate upon why risk just continues to build in this range. We'll come into detail on that in a moment. Now, before I do, it's imperative to also understand that everything around the markets happen to be moving huge. We're moving huge. Everything but the S&P 500, but the NASDAQ. And by the way, I didn't even bring up the NASDAQ. If you take a look at the NASDAQ, what's the NASDAQ doing in the week? Absolutely unchanged as well. But everything surrounding that, markets are moving huge. What's moving huge? I start with the bonds. Okay, the bonds, look at this, some wicked sell side activity. In fact, if I bring up the TLT and bring up auto expected moves, okay, look how wild that breach is to the downside. Now, okay, you have to be a little bit shocked at the implications of this, because the implications are, take a look at interest rates. Now, this is the 10-year. The 10-year okay, in just the last few weeks was actually trading. And again, I'm going to kind of script this because it's a little weird to look at this symbol. This symbol is TNX. It's the SIBO interest rate for the 10-year. We were sitting roughly, okay, at 3.6%. You realize, I mean, we're just shy of tagging, okay, 4%. That, people, is an absolutely massive move in interest rates. And it's the exact opposite of what you would have anticipated. Well, what'd you anticipate? But the Fed said that they were what? Lowering rates? Yeah, they lowered rates right at the point we actually exploded higher. The market had already priced it in. And now we got a situation in our hands. The jobs number today was spectacular. Now, I'm not going to deny that. The jobs number is spectacular. I know some people, hating on the jobs number. The BLS is full of it. Yeah, I've heard it all before. Nevertheless, jobs number comes out. And what does it display? Okay. Even the highest estimate of what anybody thought the non-farm payrolls was going to be, it beat the highest estimate by almost 50,000. It's crazy, just an absolute crazy number. And the interest rates absolutely exploded higher on that. Why? Because what the Fed won't do or can't do, the market will do for you, and that is raise interest rates. It's incredibly inflationary to see those kinds of numbers come out of non-farm payrolls. So the bonds are moving huge, but it's not just the jobs number. There's no question. Okay, the dollar has had a big effect this week. So when I'm saying things are moving huge over here, okay, yeah, sure, the S&Ps are trapped in a range, but take a look at the mighty move in the dollar. All right, there's not too many occurrences of an up move of that magnitude in these charts. I mean, you can bring up, look at this on like a 5-year. You can even see it on a 5-year of how substantial that move happens to be to the upside. Yes, there's definitely been some participation to the downside. Okay, but this is just it's a wild and woolly move right now to the upside inside of the U.S. dollar. The last portion of that equation, what really kind of sparked some of this was all about, okay, right here. This is the Japanese yen. Japanese yen's getting slaughtered. They had basically disclosed that that's it. They're not going to be raising interest rates that much more. Remember, we're lowering interest rates. Japan is actually raising them, but they backed off that. And the new prime minister, they backed off the idea of actually raising rates. And all of a sudden, the Japanese yen carry trade is back on. The yen is getting absolutely pummeled. Moreover, if you take a look actually at the British pound also got pummeled this week, along with the euro. And you're looking at what's the summation of all of this? There's huge movement everywhere but the S&Ps. And it leaves you like a little bit in a lurch. Even the commodity markets, obviously with the dollar and the yen moving big, some of the commodity markets out there, things are getting kind of wild as well. Gold kind of mellowed out, which is shocking. And I want you to think about this. I put gold up there like, well, gold's not moving huge. I understand. Gold's not moving huge, which is really scary because the dollar exploded higher. When you see the dollar explode higher, okay, and you don't see gold coming down, you realize how wildly inflationary that very well may be. So kind of an interesting dynamic, and obviously oil continues to rally just a bit this week on, of course, geopolitical risk, which is, again, one of the other reasons that risk continues to build in this marketplace. Now, before I go any further, we're going to talk in a moment here about gamma going to grow. We're going to talk about kind of a binary outcome. But before I do that, I do want to look at some individual stocks and show you a few aspects of the marketplace. First of all, I'm going to start with the financials. The reason I'm actually kicking off with the financials is, first of all, the financials are up. They are up on the week. They're about halfway home to the upper edge of the expected move. If you take a look at stocks such as JP Morgan, okay, JP Morgan, the reason I'm bringing it up, yeah, we're going to start coming into earnings season, okay? And there's a huge bid to the upside on JP Morgan, big bid under Bank of America, Citi, Morgan Stanley. Why? Why the banks? Because that 10-year is, the interest rate is actually flying right now. In the short term, that's probably a good thing. Keeps their yields big, keeps them nice and padded on the assets they have, right? So important to know, okay, financials are stronger on the week. Taking a look down at some of the usual suspects. The next thing I always jump to is after I go to financials, I always like to jump over to the energy sector. The energy sector clearly is screaming higher on the week. Why? Well, of course, this is, you can point your finger towards geopolitical risk. That is basically like if you looked at a distribution curve, all right, you're basically 2 standard deviations out. You're just outside of like a 2 standard deviation move to the upside inside of the energy sector. Great. The crazy thing is that, okay, so I just showed you the financials up big. I showed you the energy sector up big. Yet the S&Ps, okay, barely moving over here. So what gives? What gives is that the QQQ, all right, is basically flat on the week. And to get really, really specific, if you look at stocks like Microsoft, okay, you may not realize this if you don't look at these things on a weekly basis. Microsoft's actually outside the lower edge of the expected move. So it's actually cracked a lot lower. And I found this interesting because there was so much news about one of its largest holdings, OpenAPI. So OpenAPI obviously taking in a tremendous amount of capital, Microsoft part of that deal, yada, yada, yada. Microsoft owns almost half of them. Next in the docket, you look at Apple. Apple's actually marginally lower on the week. Amazon is lower on the week. Google, okay, where is our Google on the week? Google's actually up on the week. No question. It's actually closer to the upper edge of the expected move. But who's the big winner? It's Meta. Meta actually is your winner on the week. Meta actually broke to the upside of the expected move. Coming to Tesla, okay, even after Tesla's significant rally today of 4%, it's very close to the lower edge of the expected move. And last, but definitely not least, NVIDIA. The reason I'm actually bringing NVIDIA into the question here is NVIDIA was at the lower edge of its expected move. It got a bump higher because of Jensen, basically, that's the CEO, came out and actually said, Blackwell's going to be wonderful and people can't wait for it, creating a little bit of a bid back under it. But overall, okay, it's not even a mentionable this week. And I'm serious about that. Like, look, situation is forming ahead. Okay, for those of you that are into your technicals and so forth, the situation is coming to a head in NVIDIA in a big way. But the point I wanted to make is, all of a sudden, like, AI, you're like, yeah, AI. Oh, yeah, AI. It's not having, okay, the same effect that it was to have the CEO of NVIDIA come out and promote a product. It's just basically said he was going to ship on time. All right, so onward and upward from there. So what I want to loop back around to is what I call stuck in the middle with you. And what stuck in the middle with you basically means is the range right now. So obviously, we just displayed this range a little earlier. It's a very, very tight range. One of the first things I want to explain is that it's what I call gamma going to grow, right? And for those of you that are not really familiar with that, the easiest way, okay, and the best summary I can give you of this without going into like incredible detail about, I know people read articles, there's dealer gamma and there's positive gamma and negative gamma. Look, I know I come from that world. Okay, but now we're retail. Can't we all just get along, right? And so we're retail. One of the first things I would say that is imperative to understand is anytime you have a marketplace like the S&Ps, this is the S&P futures. And some people are like, well, I don't really trade the S&Ps, Donna. I trade NVIDIA. It doesn't matter. You're still influenced by the S&P futures. The S&P futures, okay, are the order flow. I mean, this is what you watch to determine the marketplace. And I know there's some old school people like, what about the Dow? What about it? There's no mention of the Dow. I can't tell you how many times I walked, off trading floors and I had no idea where the Dow is. I never know where the Dow is. It's just not really part of the equation for a trader. But the S&P, okay, and I'm looking here at the S&P futures. The S&P futures relate directly to the SPX, relates directly to the spiders, relates directly to, basically every product on the screen, the VIX. And you got to realize between VIX, SPY, SPX, throw in a little QQQ, which is the NASDAQ, all of these are interrelated. I mean, kind of one and the same. They all actually have the same stocks, in them. But the bottom line is when you start looking at this, all the volume that's traded in a day, okay, all the volume is traded in a day. Like, look, the spiders are 7.4 million contracts and got 20 minutes left. And the SPX, I mean, this is crazy because I just looked at this a minute ago. The SPX is going to do 3 million contracts today. Just between the spiders and the SPX, okay, you have well over 10 million contracts. Add a little VIX into the equation. Okay, the VIX is good for 500,000. I mean, you're basically at 11 million contracts. The entire marketplace will do like what, between 46 and 53 million contracts today. Okay, and those SPX contracts are absolutely huge. We're going to come back to the SPX though in a moment. Okay, back to the S&P futures and why this is so important. So when I say it's kind of stuck in the middle with you, this range, the longer you're in a range, okay, you're starting to kind of accumulate, right? So open interest at particular areas. So if you will, we start here. The longer we're actually in this range, okay, the more we get in terms, okay, of open interest and particular strikes. And what you're actually doing is kind of behind the scenes. That's pretty exciting. Kind of behind the scenes, something that you don't see in the chart, nor would you, is how what I would call gamma got to grow, and gamma continues to grow. And gamma is actually the risk associated with the other side of your trades, open interest. And if you sit, for example, at 57.50 for a really long period of time, guess what? The open interest, okay, will be massive at 57.50. And the irony of that is we're sitting basically at 57.50 in the SPX. That's the SPX is actually where the open interest is generated. And what you get is immense amounts of risk that continue to roll forward. So here in the SPX, okay, the open interest, but the volume. Take a look. First of all, just take a look at some of the volume in here. It's absolutely staggering to see the at-the-money options in here trading near 100,000 contracts on the call side. And moreover, what you're going to get is you're getting huge amounts of risk that are just getting pushed forward, both on a daily, okay, and on a weekly basis. They're already like rolling risk forward into next week. And obviously this 57.50 holds tremendous weight. So we're actually rolling, if you will, billions and billions of dollars of risk kind of forward. And the reason I was so surprised, I mean, to me, to see us in the exact same range, you roll risk forward and forward and forward and forward, okay? And we're on like a neutron bomb of gamma risk at this point. There's just no other clean way to put it. So as you stay in the same range, okay, as I displayed earlier, that risk just becomes its own like entity. It's like a snowball at that point. And the way that risk really kind of works, and I'll show you another interesting way to kind of put this. The way the risk really works, especially if we're in the exact same range, if I pull up a distribution curve, okay, all the risk, okay, next week is going to sit right here. The second we start to move, let's say that this is higher and this is lower, the second we start to move, that gigantic snowball can start to move higher or lower, and then nothing's going to stop it, okay? The one thing, and I know you guys are not going to like when I say this, but it's a binary outcome. As much as you want to believe, right, in the MACD and the Fibonacci and throwing a Bollinger Band in there, this is going to be absolutely a binary outcome. Not only do we have tremendous amounts of geopolitical risk, and something is very likely can happen this weekend and into Sunday night, we have geopolitical risks ahead of us, but we also have, look, next week, again, it's going to be a crap load of announcements. It's like it just doesn't stop. Nothing as big as like this week, but I think we would all agree non-farm payrolls, oh yeah, it moved the market quite a lot. But this last week of trade, and I do want to show something again, what I found almost awe-inspiring. This last week of trade, we had, okay, roughly, and I'm just going to zoom into it, 100-point expected move. In fact, to give you specifics, $99.36. So this move, this last week, we were looking for a 100-point move higher or lower. What did we get? Absolutely nothing. It's freaking shocking. Again, given the fact that anybody that watched the marketplace this week was downright sketchy. It had sketchy written all over. S&Ps were swinging around by 20 and 30 handles in seconds. I mean, we had 1-minute candles that were 20 S&P points, and I'm not talking about the announcements. I mean, we're just, up and down, 20, 30 handles yesterday all day long on Thursday to go where? Absolutely nowhere, okay? But here's the crazy part. After I said all of that, and we're massively unchanged, you had a $100 expected move. We didn't hit the edges of expected move last week. We didn't hit the edges of expected move, okay, this week. What are we looking at next week? And this is the part that I was like, oh, they're going to contract volatility. Like this next week is really going to suck. This next week, it's jacked again. $100 expected move. Now that's not set in stone. Crap could still get crazy, but I don't care. By the way, I don't care that there's another, there's only 14 minutes left. Yes, 14 minutes left. And as I just said, okay, I saw a 20 handle move out of basically thin air the other day in 1 minute in the S&Ps. So I don't give a crap. There's still a $100 expected move for next week. Okay, what do you learn from this? Volatility ain't backing down. Okay, it doesn't matter what we think, the risk is. We know one thing. We know that the volatility futures, they're still up there. And I'm going to leave you with this thought. So you know that we're going to be going into another really heavy volatility week. Even though we were massively unchanged and we went everywhere to go absolutely nowhere, this next week's going to be crazy. The volatility futures are still in a massive backwardation. Let me further that. The VIX. Everybody's familiar with the VIX. You go, nothing happened this week. Really? You're right. Nothing happened, except then why is volatility, VIX, at the upper edge of its expected move? You're like, oh, volatility got crushed today by 10%. Yeah, it got crushed right back to what it was expected to do. So we are amped right now. We have a high skew, a high VVIX. I didn't even bring up the VVIX. Let's get crazy for a moment. Even the VVIX, the VVIX, it got crushed down to where? 110? 110 is get under your desk and rock back and forth kind of territory, right? There are a lot of things in this marketplace that are all kinds of wrong right now. You just got to recognize just this risk, okay? This barrel of risk just continues to get rolled forward. It's going to build, okay? And those markets that are trapped in a range, yeah, when we do actually break the range, it's going to get big, it's going to get bad, and it's going to get ugly. Don't get caught looking for a particular move. And if you are wildly bullish or wildly bearish, people, use defined risk. Thanks everybody for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.